If it can happen to me, it can happen to anyone.
In the current environment, anyone can be taken by an investment fraud.
I've seen Harvard-educated lawyers, doctors, accountants, even law enforcement fall for investment scams.
He had a reputation around town as paying these great returns, and it was a great deal.
I knew all about his family, his wife, his children.
Everyone trusted him because he was looked up at in the community.
The attorneys looked over the paperwork. It looked like it was a legit deal.
We don't promise you, the Lord does.
I didn't even take a broker's fee on that.
I said I would not call unless it was a rare and definitely undervalued situation.
I was willing to take more risk because I'm trying to make up for what I consider lost time.
They managed to con dozens of people out of hundreds of thousands of dollars.
It's possible for a con artist to swamp our thinking processes by getting our emotions up so high.
When said and done, they had taken in almost $580 million.
My name is Jerry Walsh, and I've been fighting investment fraud for more than 15 years. I've seen up close the hardship that follows when people lose their homes or their retirement savings to a smooth-talking con criminal. The pitch or the hook they use to lure their victims is usually different, but their methods are always the same. Once you understand how the bad guys operate, you can outsmart them at their own game.
I'd be on the phone with the victim, purporting to be the president of a bank. And in all actuality, I'm at a payphone craving cocaine.
I was a monster on the telephone. I have strong capabilities to persuade people to do things that they would probably say, if asked, they'd never do in a million years. Give me 45 minutes on the phone with them, and I'll change that.
Thank you. Thanks for coming out. My name is Jerry Walsh. Today we will spend a fair amount of time together talking about investment fraud, who's at risk, and most importantly, the simple steps you can take to avoid it. I'm the Vice President for Investor Education at FINRA, the Financial Industry Regulatory Authority. Over the next 15 years, almost 80 million baby boomers will retire, and they will have more than $8 trillion in investable assets. The goal of today's program is to make sure that not a single one of those dollars winds up in the hands of a con criminal, because when the con criminals win, the results can be devastating.
Home for Herman and Debbie Weber is this aging trailer park just off a busy highway in Riverside, California. Aesthetically, it's a long way from their former home, a well-kept ranch in an upscale neighborhood in nearby Rialto.
Sure miss it. This house is supposed to be ours. Look at our trees. We planted those palms.
2 years ago, they lost their dream home to foreclosure. Herman and Debbie, on the advice of friends, invested all their life savings and home equity with this man, James Duncan, a.k.a. James the Cash King. He portrayed himself as a savvy investor and a man of God, and used his father's upstanding reputation as a pastor to gain credibility with his target victims. Where did he find them? On the internet, at large investment seminars, and by word of mouth.
Duncan and his crew came through and they had us refinance the house. They tell us they take that money out, they invest it in your securities and money markets.
But it was an apparent scam. Instead of 20 to 40% guaranteed returns, Herman and Debbie, along with many others in Southern California, were wiped out.
And the leader of the group called himself the Cash King. Today, 7 people were formally charged in a Riverside court.
California authorities say Duncan and his cronies pocketed more than $17 million. He's in jail, charged with securities and mortgage fraud, and has been accused of operating similar scams in Iowa, Wisconsin, and Washington.
It's all still there.
Today is their first day back at their old neighborhood.
I miss living here. Why, there's such a difference.
It is difficult.
We even have our initials in the concrete up there because we laid that side slab and built the retaining wall.
The cons who took the Webers' money will likely spend many years in prison, but that doesn't make it much easier for the victims.
It's our house. We're supposed to be here.
We're all here today so that Herman and Debbie Weber's story does not become your story. So let's get started. Now with me today is Doug Shadell. Doug is a leading expert in investment fraud. Doug is the author of Weapons of Fraud, a former fraud investigator, and he now works with AARP in Seattle. Welcome, Doug.
Thanks, Jerry. You know, we're not here to scare you. You are all smart investors, but we want to make you even smarter. Fraud poisons the system. And you may have heard of some of these big investment fraud cases like the Bernie Madoff case, but those cases are just the tip of the iceberg.
But we don't know just how big the problem is. Why? Because there's a gross underreporting of investment fraud. Only a fraction of victims come forward and complain. Some don't realize or want to believe that they were taken, and many are ashamed.
I just think it's human nature, if you're a decent person, that you can't imagine the evil that lies at the heart of some of these people.
They're more reluctant to hire a lawyer, to even discuss the potential of bringing suit because they're embarrassed. Maybe their status in society, maybe that if litigation were to follow, that they would appear lesser in the eyes of their peers or business associates or family.
A lot of older people are really afraid of losing their control over aspects of their life, like their finances, and feel that if they report, if their family finds out that they've fallen victim to a scam, that the children may move in and take over the finances, or they may have other checks on them, and it's a real loss of independence.
We want to encourage people to tell the authorities about investment frauds, to report fraud to their securities regulators. And we want everyone to know who's actually at risk.
One of the first things I learned is that the typical fraud victim looks a lot like me.
Let's debunk that stereotype of the investment fraud victim being the little old lady living alone, limited means. She gets a phone call, a slick-talking salesman says, hey, buy this investment. A month later, she's out of her life savings. Now, does that happen? Absolutely, but not as often as you think. And investment fraudsters aren't targeting the little old ladies. They're targeting all of us. They're targeting you.
And anyone with money really is a potential target. Think about what's unfolded with this Bernie Madoff case, the largest investment scam in history. And his victims were smart, wealthy, sophisticated, and fooled.
And research shows that's true across a variety of investment scams. Here are some of the people you'll be meeting today. They've been taken in investment scams across the country.
If you're stealing my money, that's one thing. If I'm risking it and the investment does not prove worthy, that's another. But in this case, they just simply stole the money.
We had phone calls to contact people, we had documentation to contact people with, and everything appeared to be on the up and up.
You know, you want to believe. You're getting a statement that says your account's doing this well. This is great.
2 years after he started stealing from us, we paid him another $30,000.
A lot of times when you do take risks, you overlook certain warning signs.
You suspend disbelief. You want to believe.
All the people that got taken had really pretty high educations.
You know, you would think I'd know better than that. But the reason is because I dropped my guard.
As you can see, these fraud victims are professionals. They're teachers, doctors, lawyers, stockbrokers, businessmen. In fact, the typical investment fraud victim is a well-educated male between the ages of 55 and 65.
Let's hear now from the expert. Robert Cialdini is a psychologist at Arizona State University. He is an expert on the psychology of persuasion and influence, and you're going to hear a lot from Dr. Cialdini in this program.
If you think you're invulnerable to these things. Your defenses come down, and you become more vulnerable as a consequence. So those individuals who have background and experience, who think they know what constitutes a trick and what doesn't, then open themselves up to the possibility of being tricked because they're sure that they can spot it and resist it. Oftentimes they're wrong.
Of all the things you hear today, what Dr. Cialdini just said may well be the most important. Let's meet someone who is highly educated, financially literate, and scammed.
You just sit at that table right there.
Lunch at Bilbo's Barbecue outside of Atlanta. The ribs are hot, the tea sweet, the table's full.
Good, though.
Local stockbroker Steve Sampler is taking a client to lunch, advising on the menu.
You want to come around here? Will you
This
take
part of the
our
country
order?
is fairly conservative, and that reflects Steve's own advice to clients. Build wealth safely, nothing too risky.
That's it.
But Steve does not take his own advice. Steve recently lost $40,000 in an oil and gas scam, purchasing unregistered shares in non-producing oil wells.
If it can happen to me, it can happen to anyone.
He's right about that. Steve is a licensed professional stockbroker, smart, with 2 degrees, accounting and marketing management. But he was taken in by a con man with a telephone.
Of course, they did say that they really hated for me to miss this opportunity, and I would probably never get this type of opportunity again.
The con used an old trick, scarcity, telling Steve there were only a few units left to invest in and he had to move quickly. He'd make 10 times his investment. Steve did not bite at first, but the calls continued, week after week.
As I began to talk to him more, and of course he knew basically he was wearing me down.
Steve began to know and like the salesman, a big mistake.
Everyone has a tendency to trust people. Once you get to know them, particularly, you want to trust them. You don't want to think bad of them.
It's not going to happen in the first call. It's going to happen after months and months of doing business with that person, that you're going to be endeared to the personality and share intimate things about your life with them. When somebody starts taking you down that personal lane and asking you about memories and asking you about what makes you tick, they're doing what I'm telling you I did, which was set up my arsenal for the close.
The salesman I dealt with, I knew all about his family, his wife, his children, where he lived.
Steve sent $20,000 in and received official-looking securities and did some due diligence.
I talked to the district manager in Dallas. Oh, yes, there are 15 wells out there. Everything was just right in place.
So he sent in another $20,000, and it was gone. The shell company liquidated, shut down by the authorities.
He's your friend, but then one day, he disappears.
Still, how and why does a professional like Steve fall for this?
The older I've gotten, the more risk I'm willing to take for some reason. But I think what that stems from is I'm not where I thought I should be at this point in life. Oh, I'm trying to hit home runs.
Steve, like so many investors, was trying to play catch-up, an all-too-common tendency among mature investors. He wanted to hit one out of the park.
Home runners strike out more often than the base hitters. And that's what happened to me. And that's what will happen to anyone else that is not very careful, especially today.
Well, that's Steve's story. He lost over $40,000, and that's bad, but it could have been a lot worse. Now, how did the fraudsters find Steve? His name showed up on a list of investors that were willing to take risk. These lists are called mooch lists, and they're sold and resold among scammers. Once you're identified by a fraudster as an investor who's willing to take risk, you get a big target on your back.
Now, the con artist will also use something called a fronter, which you may not know about. And a fronter is someone who gets the information, makes comments like you see here, and he hands it over to the con man. And now he's armed with information that helps him take your money.
Marketing lists are common tools used by legitimate businesses. And one of the themes that we'll keep repeating here today is that legitimate businesses use some of the same techniques that con artists use. There is one other common characteristic that victims of investment fraud share. They engage in risky behaviors, and the con criminals know this. Jameson Kawai is a risk taker in many senses of the word. Let's see how this behavior cost him.
Vancouver, Washington real estate developer Jameson Kawai likes to go fast.
I love racing a lot. Speed is fun.
This morning, Jameson is taking his personal car for a spin on Portland's International Raceway. Not long ago, he and his wife owned a race car, but it, along with a lot of other things, had to be sold after Jameson lost more than $82,000 in an investment scam.
Business-wise, had to cancel quite a few contracts, lost some earnest money from another investor.
Jameson was lured into the investment trap by a local businessman who sponsored his wife's race car. The con promised Jameson millions to develop real estate, but first Jameson had to fork over $82,000 in fees to access that money. All the documents looked good, and the con was a smooth talker.
He knew how to push my buttons in the right area to push me to give him the money.
The businessman got that money and gave nothing back to Jameson. It was all just phantom riches.
Sounded too good to be true. The nature of the documents that Jameson brought to me and that I reviewed were just telltale signs of a sophisticated high-tech fraud.
The businessman was eventually found to have engaged in racketeering and fraud. Jameson was awarded damages, but does not expect to collect anything. Jameson is a risk taker on the racetrack and in his profession.
The risk in anything, including investment and what we do is land development consulting and land development itself, is without risk, there's no reward.
But while that risk mentality might help make Jameson successful in real estate, it also makes him easy and alluring prey for the con artist.
Now, all investing involves some level of risk. But some investors who might consider themselves risk-averse actually engage in risky behaviors. In a study that focused on fraud factors, we found that 72% of victims, compared with half of the general population, had invested in products or companies that were not registered with the Securities and Exchange Commission, including low-priced penny stocks and promissory notes.
70% of victims made an investment decision based on advice from a relative or friend.
In our national survey, 80% of investors did not check the professional for previous law violations, and most did not check the professional or the product registration.
3 times as many victims went to a free investment seminar as our national sample of investors. And victims were more likely to read mail from unknown sources and listen to telemarketers. In this research, what we did is we found known victims, people who we had previously independently identified to have lost money in scams, and we identified a general investor population. We asked them both a series of questions. Among the questions was a series of financial literacy questions. What's the difference between a stock and a bond? What's an APR? And we thought, the victims wouldn't be as financially literate, but they turned out to be more financially literate. But we also asked those same 2 groups another set of questions. We gave them what are commonly known and what to you and I might be obvious pitch lines, like, you could make 100% in the first year, that kind of stuff. And the victims were not as able to identify those as persuasion tactics as the general investor population. So while they may be more financially literate victims, they are less persuasion literate.
So the con criminals know who you are and that you might be a potential target. So what's next? How do they do it? One word: persuasion, and lots of it.
Hi, Dr. Jacobs. This is Chris Marlin over at JT Marlin.
Marlin?
Right, he's my father.
He's my mother.
So my associate tells me you're interested in one of our stocks.
Your wife's on range. I will call her back. Yes, MSC sounds like it might be interesting.
Might be. Might be doesn't sell stock at the rate MSC's going for, Dr. Jacobs. We're talking very high volume here.
Oh, well, I still have to run it by my people.
That's great, Doc, if you want to miss yet another opportunity here and watch your colleagues get rich doing clinical trials, and don't buy a share and hang up the phone.
Well, hold on a second now. I didn't say that. I just want to talk about it some more.
Honestly, Doc, I don't have the time. This stock is blowing up right now. The whole firm's going nuts. Hold on, let me open up the door to my office. See that, Doc? That's my trading floor. Now I have a million calls to make to a million other doctors who are already in the know. I can't walk you through this right now. I'm sorry.
The crush or the kill is emotionally driven. It's not logic. If you apply logic to this concept, it's no. I'm not going to send you my hard-earned money. I don't even know who you are. I know you from Adam. When I wrap that in tons of emotion, that blurs. The logic goes out the window, the emotion kicks in.
Okay, let's do this.
Now, since you're a new account, I cannot go any higher than 2,000 shares. I'm sorry.
2,000? Are you nuts? That is way beyond what I was thinking. 2,000? Jesus. Listen, I'm curious. Why can't you sell me any more than that?
Well, we like to establish a relationship with our clients on something small before we get to the more serious trades. Let me show you several percentage points on this small trade, and then we'll talk about doing future business.
That sounds good. Give me the 2,000 shares.
Done.
You sure you can't do any better on this one?
I'm sorry, Dr. Jacobs. I can't. I'm sorry.
Oh, all right. We'll start with this trade then.
Great. I promise we'll swing for the fences on the next one. Do you want that confirmation sent to your office or your mansion?
Very funny, Mr. Marlin.
Let me put my secretary on, and she'll take down your info. It was a pleasure doing business with you. Done and done.
All right, that's the movies. But in real life, the con criminals are pros. We wanted to find out exactly what tactics fraudsters use. So we partnered with Doug Shadell and his colleagues at AARP in Washington to find out how successful, financially intelligent individuals fall for these kinds of investment scams.
The research took almost 4 years to accomplish, but yielded unprecedented results. We reviewed hundreds of undercover tapes of actual con men pitching victims. Let's listen.
I've got a partner base of about 58 individuals, and they can, on any given program that I do, I'm only able to get about 10% of it, simply because the other 90% of the program is taken by industry people that drill these wells on a daily basis and do this for a living. And they do
For God's sakes, just 4 remain at this grade.
Here is the bottom line. Take and write down what I'm going to tell you, and do this exactly as I tell you, and don't switch up on me again, okay? Yep, answer me, okay?
These fraud experts spent 4 years listening to hundreds of hours of con come-ons.
We found a lot of these con men will ask about your grandchildren and ask about your hobbies and ask about your military service. And that's not to find out your financial information. That's just to get a picture of what kind of a pitch is going to work on you.
So the more information the investor gives them, the more they're able to customize their tactic.
A lot of times there are a series of conversations leading up to this. So out of context, it seems odd. But what these con men are doing is they're asking a lot of questions. They're finding out who is controllable and who isn't.
Something that's been consistent throughout this research is that we see a lot of different tactics used in investment fraud compared to other types of financial fraud.
The only way to defend against this barrage of tactics is to understand them before encountering them.
Those investment tapes were invaluable. They gave us some incredibly powerful tools so that we could figure out how to help investors get around them.
These are the 5 most common tactics used by investment con criminals that we found when we did this tape analysis. Phantom riches, source credibility, social consensus, reciprocity, and scarcity. And if you can learn to spot these tactics, it'll go a long way towards being able to resist these fraudulent attempts.
And remember, you encounter these tactics every day. If you go to the grocery store, you'll see signs that are like, get it while supplies last, 2 for 1. And the fact that we get so used to all this persuasion is a big part of what makes us feel like we are invulnerable to it.
Probably the most powerful tactic we saw, the one that was most commonly found in these tapes, is something we call phantom riches. And it's really the basis of all investment fraud. The criminal tempts you with the promise of riches, but he can't really provide those riches because they don't exist.
That's why it's called a phantom. It's something that you desire, but it's something that you simply cannot have. It might be that dangling of, X% return, or you'll get this many number of dollars each month, and it makes you do things that you wouldn't ordinarily do.
If you want something badly enough, it can really hinder your ability to critically examine an offer. Part of the goal of persuasion is to move you out of the logical reasoning part of your mind into the emotion. It's what con artists call putting you under the ether. This is what they call the emotional state. And so the reason it doesn't matter how intelligent you are is that if you're not using your logical reasoning mind, then it just completely bypasses that intelligence. I interviewed a person 2 weeks ago who had a PhD in chemistry and was a retired employee of a big oil company, and he lost $500,000 to an oil and gas scam. And he worked for an oil company, and he was a PhD in chemistry, right? But the reason those things happen is because he's not using that intelligence. The con artist has a way of bypassing it and getting you to talk about the emotion of the investment. He finds out all about your family, and he finds out about your kids. And this guy started telling me these things, actually, and saying, yeah, well, I invested it for my kids, and I'd do anything for my kids, and that's all I really wanted. It wasn't greed, it was just I wanted, right? So this con artist had obviously engaged him in a series of questions to find out about his personal life, and that's what gets you under the ether.
It's possible for a con artist to swamp our thinking processes by getting our emotions up so high and so powerful in our thinking that that's what sweeps us away.
Thoughts versus emotions.
People want to trust the person they're giving their money to, and so the con criminal will exploit that trust. Ruth and Len Mitchell trusted their longtime accountant and friend for financial advice. He promised phantom riches.
For Ruth and Len Mitchell, their golden years in the Valley of the Sun are not so golden after all. 2 years before retiring to Arizona, they fell victim to a Ponzi scheme, losing $130,000. These are among the most common investment frauds. The criminal takes money from investors to pay off other investors until it all falls apart. Ruth and Len were taken in by their accountant Barry Corkin, someone they trusted, someone who knew them, and seemed to know about money.
He had 2 big homes, he had boats, he had a Corvette, he had a Cadillac, he had trucks.
He looked trustworthy, and he was looked up to in the community. Ruth is a professional skater. Barry, the con artist, joined her skating club and lots of other clubs in their hometown, a common tactic of the investment crook.
They join everything they can join where they think that there will be people who have a few bucks that they can then give to them, a crime of affinity.
And once they're in the club, the dinners and the attention start, and the checkbooks open up.
He was a great con man. That's all I can say. Always kept a Bible on his desk. Always kept a Bible on his desk.
The fraudsters don't want you to think. They want to hook you emotionally. The power of phantom riches is persuasive indeed, but the con criminal does not stop there. They also use source credibility.
And what is source credibility? People want to trust the person they give money to, the authority, the expert. It makes a lot of sense. But the problem is that credibility can be faked.
This is the site of our escapade. We take a railroad crossing bridge and we put on it a simple sign that says, Delaware closed today. Then we get a man with a lantern and another fella with an official-looking hat, and he flags down the first passing car, and here's what happens.
I'm sorry to inconvenience you, but they've closed the state of Delaware today.
For what?
Well, the quota's filled. Any other state is fine, dear. You can go into Pennsylvania, Maryland, New Jersey.
What is this?
You don't understand. This
No.
is the barrier.
Yeah.
This is the state of Delaware on the left.
Yes.
This is the state of Pennsylvania on the right.
Yes.
You're coming from Pennsylvania to Delaware.
Yes.
But the state of Delaware is closed. That's it.
Well, never has been.
They've closed the state of Delaware today.
They have?
Yes.
That's good.
Tomorrow you can come back, but not today. See, they left us out here with the orders that we're not supposed to allow anybody into Delaware. It's like spring cleaning. They're fixing everything.
Oh, is New Jersey open?
Yes.
Oh, well, then I'll go to New Jersey.
Well, this is funny and it's absurd, but the point is that credibility can be faked. You put on a nice tie, you wear the trappings of a professional investment broker, but the point is that brokers can be verified, and we're going to be talking about that a little later.
But first, we want to tell you about the next persuasion tactic, and that's called social consensus. It's a simple rule in our head. If everybody's doing it, it must be good. The scam you're about to see next is one of the worst.
Just convicted on the 506 scam out of California. Okay.
Wednesday morning, the Alabama State Securities Commission.
Do we have unregistered stock here?
Joe Borg and his team of investigators are going after the cons, criminals, unlicensed scam artists.
We've got several trials scheduled for March.
This team knows you can find them in the unlikeliest of places. To most Americans, nothing is more sacred than their faith. The bad guys, they know this.
Look, I got to tell you, I've seen more money stolen in the name of God than any other way.
As head of Alabama's State Security Commission, Joe Borg has helped bust some of the country's biggest religious investment scams, like the notorious Greater Ministries International scandal, a Ponzi scheme that traded on people's faith. Take a look.
All right, if you do, then don't put it on your tax return that you donated any money to Greater. That way you can have all the money when it comes back. Every gift we give you back, you do not have to pay taxes on it unless you choose to do so.
True believers were told by this man, Gerald Payne, and other so-called men of God, to invest with Greater Ministries. The church would guarantee a 17% return.
We don't promise you, the Lord does.
The way they put it was very interesting. This was God's Social Security program for Christians.
You'll see a donation form there.
When we were said and done, we found that they had taken in almost $580 million.
These religious scams are a mosaic of the most common fraud techniques. Source credibility. To the faithful, you can't get more credible than God. And social consensus, your fellow parishioners are doing it.
People have a tendency to do what their friends and neighbors do. Because when you have a social group, you tend to have the same interests and the same likes.
Investors are more vulnerable during tough economic times. They look for quick scores, guarantees. Faith, not logic, rules. So even the smartest investors get scammed.
Anybody can be taken. The con artists are really slick. It doesn't mean the individuals are stupid or they have a lack of education. In fact, most of the good scams are against folks who have a good degree of education, who know something about finance, they have cash in the bank, which is why seniors now are a big target. Before you turn your money over to anyone, before you let go of that hard-earned cash that you worked hard for, check with your state securities regulator or check with FINRA. Is this person licensed to do business? Is this product that he wants to sell registered to be sold? And if the answer to that is he's not licensed and this product's not registered, hold on to your wallet because he has no business doing business with you. Considering what we've got in the pipeline on cases...
These investigators are busy.
But it's sort of a banner year for criminal enterprises, especially with the markets being down.
And unfortunately, they're going to stay busy unless the public starts investigating themselves. Check out that investment with the regulators before, not after you turn over your money.
That's a theme you're going to continue to hear, ask and check. But Greater Ministries is one of the more egregious examples of social consensus, where everybody in a parish was investing and everybody felt good about that investment. Everybody felt smart, felt like it was the right thing to do. It was a smart thing to do. It was the Christian thing to do. We're not singling out religion. The truth is that social consensus can happen in a variety of ways. Con criminals trade on people's faith. They trade on their convictions. They also target people by looking at particular groups. It's a concept called affinity fraud. Affinity fraud takes place when a particular identifiable group of people is singled out. Con criminals use this all the time. They go to golf clubs, they go to universities, all sorts of social groups.
The next tactic we want to discuss is reciprocity. Remember those supposed free lunches we talked about earlier? That's an example of reciprocity. The con is giving you something, and he wants a big favor in return, your investment dollars.
We are trained from childhood. You must not take without giving in return. You must not take without giving in return. You have to give back to those who have given to you. And we have very nasty names for people who don't play by that rule. Right? We call them moochers or sponges or takers or teenagers. Right? Nobody wants to be labeled like that. So when somebody gives us something, we feel an obligation to give back. Otherwise, we're not playing by the rules of our society, the things that our parents trained us, our teachers, our scout masters, and so on, from childhood. That's the way we're supposed to work. So, for example, when the American Disabled Veterans Organization sends out a request for donations to its good cause, it gets about an 18% success rate. If instead they include in the envelope a little packet of personalized address labels, you know, these gum things you put on your envelope, their hit rate goes from 18% to 35%. Because people have received, even though they didn't ask for it, even though they may not want those labels, they have received, and now they feel obligated to give. That's why these con criminals, especially investment fraud, will set up situations, dinners, various kinds of opportunities where they give you something first. A free meal, free information, and so on, and then they'll say, now, come with us. And you feel obligated after taking what they've given to give back.
Now remember, these free lunches and dinners, they're not gifts. They're sales tactics designed to get your money. Just because somebody gives you a free meal doesn't mean that you should turn over your life savings. The hard sell might not happen during the free meal itself, but you fill out a card, you put your name and address down, you give your email, you give your phone number, and then people contact you. And because you met them at a seminar, because you're familiar with their company, you take that phone call or you open up that letter. So the hard sell doesn't happen at the seminar necessarily, it comes later.
You know, another tactic that's really used a lot is scarcity. Have you ever tried to buy a house? Most of us have bought a house at one time. And I don't know about you, but the last time, the salesman tried to create some urgency by saying, you know, if you don't make an offer right now, this house is going to be gone. And when you've experienced that, you think, what happens? You start panicking. It's gone. This is the only one. That's the tactic of scarcity, and it's used a lot in these con games.
Scarcity is simply the concept that if something is rare or time-limited, it must be more valuable.
Yeah, and scarcity is usually used as a closing tactic. It creates a panic. Let's see how scarcity is used at a gold coin scam.
I said I would not call unless it was a rare and definitely undervalued situation. Are you familiar with the $2.50 gold Indian series?
Now, John, back in 1860 from the Philadelphia Mint, there were 22,675 of these coins minted. Of those 22,000, only 4 have survived. Only 4!
Only 4. What happens when you hear only 4? Your gut panics, right? We actually interviewed this guy who said that, and the truth is he actually had hundreds of coins. He was faking scarcity.
What's the recurring theme here? The idea is that you're swept away emotionally. That's the purpose of these persuasion tactics, to prevent you from thinking rationally. Now you know what 5 tactics to look out for. You may even begin to recognize them in other parts of your ordinary life. You don't need to remember each tactic by name. Instead, remember the emotion they trigger.
And I'm pretty sure you'll be able to recognize all of the persuasion tactics we've discussed in this parody of one of our national pastimes, shopping. See how many you can spot.
Ladies and gentlemen, I have to tell you that I have never seen anything that we have ever offered here on the Smart Shopping Network that is getting the response we are getting tonight for the Miracle Shim. Look at that. Isn't that attractive? Now, look at this chair here. A little tipsy, isn't it? You probably have one like it. But you just slip one of these little beauties right under that chair or table leg that's not quite touching the floor as well as the others, and voila, problem is solved. These are the same shims used in the White House, Buckingham Palace, the Taj Mahal has lots of them, and all of Donald Trump's homes too, every single one of them, and he has a lot of them. You know, Princess Diana, it is said, would not sit at a table until it had been specially leveled with Miracle Shims. She had a guy with her, went with her all the time. He had a bag full of shims. True story. You cannot find Miracle Shim in the stores. You just can't. They're not available in stores. They're not available from anywhere but right here, right now, from me. And they're not going to be here long either, believe me. I'm told the hickory now is really selling like hotcakes. So let's take a look at the counter and, whoa, my goodness, over 12,000 sold just since I've been on the air. These sets sold out completely last time we had them on the air, so I'm not surprised by that. We have got Bernie from Normal, Illinois on the line. How are you, my friend?
Hi. I just called to say that I love my Miracle Shims.
Do you now?
I just bought 3 more of them tonight.
Whew, 3 of them?
Yeah, and my neighbor's trying to get through to you right now to buy some.
Well, you better hurry, because I'm told the cedar just sold out.
I bought one for my wife. Our anniversary's coming up.
Well, your wife has herself one thoughtful husband.
Yeah, well, you know, it sure beats buying a new dining room set.
Well, thank you, Bernie. And, you know, he raises a very good point, folks. New dining room set, several $100s. For only 5 easy payments of $9.98, as the kids say, that's a no-brainer. But I'm being told now the Miracle Shims are all sold out. They are all gone, except, you know, for this one here, under the chair. Oh, wait a minute, I just thought of another one we've got right under the table here. We'll sacrifice that, but you better call now before it's gone too.
Now let me ask you something. How many, did you spot any? Can you see any of the tactics we just described out here? You know that little time clock on the right side? What's that? Scarcity.
Yeah.
The time is running out, right? And how about the ticker with the number being purchased? Social consensus. They've got this down.
You actually don't need to know the names of the tactics. You just need to be in tune with the emotions that they trigger. It's okay to love your investments, but just don't buy them when you're feeling all that love. Take a step back, take a deep breath. Don't let persuasion get to you. So now let's talk about prevention. Knowing the right steps to take is critical because, as you'll see, even those in the business of protecting citizens can't always protect their own families.
Bennington, Vermont is one of those postcard-perfect New England villages. From the white church steeple to the rolling hills to a quaint downtown. It's also the home of Bob Kalinowski. A 25-year veteran of the state police, Bob's job is to serve and protect. But he thinks he might have fallen down on that job when it came to watching out for his own father.
I didn't see this happening, and I felt rotten because I was supposed to be able to protect everybody and protect my parents and my family, and I wasn't able to do that. I didn't see this coming.
What he did not see was $100,000 of his late father's money lost to a local con artist in an investment scheme. Money his father had saved from a lifetime of hard labor. Bob still believes that most people are good. Perhaps that's a fortunate consequence of living here. Still, his father's experience taught him a painful lesson.
No matter what, it can happen to anybody if they're not careful. They really need to check into things before they go investing their money, making big investments. Ask questions, do research, ask the experts. Because if it can happen to our family, it can happen to anybody.
Ask and check. Those are wise words and one of the key messages that we've been driving home throughout our program today. Your first line of defense is to reduce the number of pitches that you're exposed to. Here are a few simple steps you can take.
So the first thing is just remember, there is no such thing as a free lunch.
The second thing, avoid high-risk investments.
How many of you are signed up for the Do Not Call phone list? Do you know what that is? Where you can get your name on everybody is. That's really great. That is a great way to cut down the clutter and reduce the number of pitches.
The other thing that you can do is if you do get that call or if you do go to that investment seminar, you can develop a refusal script. Now, what's a refusal script? A refusal script is something that you practice in advance so that you feel comfortable saying no. Pat Cashman is going to come back and he's going to show you the wrong way and then the right way to have a refusal script.
Hello? Hi there. Hi, is this Mr. Rucker?
Yeah.
How are you tonight, sir?
Good.
I'm good too, sir. Let me tell you why that's funny, Mr. Rucker.
Okay.
My name is Good. Ron Good.
Oh.
It's got an E on the end, so some people pronounce it Goody, but it's just Good.
Yeah.
And may I say, sir, that the news is good, especially for you.
Oh, yeah?
You might remember you went to one of our seminars a couple of weeks ago. I'm just following up on that. I'm a money manager with the Dunkington Fund. I would imagine that name is familiar to you. I mean, you came to the seminar after all. You do remember the name, don't you, sir?
Sure.
Yeah. You are, I should say, sitting on the ground floor of an incredible new equity fund opportunity. I've never seen one like it. Already paying 48% annually, and you probably saw where the Wall Street Journal says it's heading to 70 or 80% territory. You read the Journal, sir?
Sometimes.
As you can probably figure, a fund this hot is bringing all the big boy investors like Gates and Buffett running in to snatch it all up.
Right.
We're generally seeing people with annual incomes, I don't know, 100,000 or more coming in on this deal. Is that your ballpark, Mr. Rucker?
Yeah, around that.
I would love, sir, to overnight you some information so you can see the numbers all in black and white.
Okay.
Give you a day or two to look at it, and then I'll see what you think.
Okay. Good.
Okay. What's the best mailing address for you, sir?
I guess it'd be right here to my home.
You and your family live there, do you?
Just my wife and me. The kids are grown up now.
Whoa! You sound so much younger, sir.
Thanks.
What is that address?
4257 Oak.
That is a beautiful part of town.
Yeah, it's nice. Yeah.
What town is that exactly?
Edgemont, South Dakota.
Okay, yeah. And what's the zip code?
I'm not sure because they changed it a couple weeks ago.
Okay, well, I'll just make a note here that you don't know zip.
Okay.
All right, bye now.
Bye. Nice guy.
Hello? Hi there. Hi, is this Mr. Rucker?
Yeah.
How are you tonight, sir?
Good.
I'm good, too. Let me tell you why that's so funny, Mr. Rucker. My name is Good. Ron Good.
And why are you calling, Mr. Good?
Well, I'm a money manager with the Dunkington Fund. You came to a seminar a couple of weeks ago. I'm just following up on that. Dunkington Fund, I imagine that name's familiar to you if you know anything about investing.
Are you a registered broker, sir?
Yeah, we're registered with everybody. In fact, we won an award.
Well, see,
let me ask you a question, Mr. Rucker. Are you interested in making money?
What I'm interested in is getting your registration number and a phone number where I can call you back after I verify things, okay?
Okay, well, you could do that, but by the time you call me back, the opportunity's going to be gone.
Well, I guess you better call someone else.
The right way is great. Instead of letting the fraud artist take control of the conversation, what Pat Cashman does when he does it the right way is he says, wait a second, before you go any further, are you licensed to sell this security? What's your registration number?
My advice would be ask too many questions. Use common sense, ask logical questions, and through the process of gathering and formulating your questions, be thinking about what's in it for them instead of what's in it for you. And at that point, things will start to crystallize. And that's when you'll start to see the too good to be true and why would somebody do so much for so little. And, and in the process of asking all of those questions, you will deter that salesman. He will want to move on to the person who's not asking so many questions.
All too often, we see investors who relied solely on the recommendation of a friend or an acquaintance and did not ask whether the seller was licensed, or ask whether the product was registered. Asking these questions and independently checking the answers could have spared these investors from serious financial losses.
Sarasota, Florida is a con artist's dream. Despite a real estate downturn, there's still lots of wealth here, and lots more moving in all the time.
Okay, why don't you flip on over to your back for me?
The area attracts affluent professionals like chiropractor Craig Siegel, who moved here 20 years ago, lured by the great weather and economic prospects.
You can golf, but don't overdo it.
Siegel has done well here, well enough to be targeted and allegedly ripped off by a local con criminal for more than $1.2 million.
He had a group of people that were friends of friends of friends, and as it exponentially grew out, people got swept up in what he was selling.
What the alleged con, Bo Diamond, was selling were bogus securities contracts that guaranteed investors a 3 to 5% monthly return. But in fact, authorities say he was keeping much of the money to fund an extravagant lifestyle.
I remember the first time I met him, you know, wearing very expensive jewelry, drove up in a Lamborghini around that time, seemed to have a little bit of money.
More than a little. Investors here lost $37 million, while Bo lived in this multi-million-dollar waterfront home. The Diamond name is well known in Sarasota. Father Harvey wrote the best-selling health books Fit for Life. Local residents thought the Diamond name was golden. Sarasota's wealthy and well-to-do were targeted. John McKinney is a local tax attorney who lost $250,000 in the scheme.
The word was around. He was producing some seriously nice returns. And I felt lucky to get involved. This was how rich people get richer, and this was my ticket to the big dance, so to speak.
Bo was paying great returns to those initial investors who convinced unwitting friends to invest, a classic Ponzi scheme. John McKinney, Craig Siegel, and others say they relied on the Diamond name, asked friends for recommendations, but few went any further.
I didn't particularly look into the licensing of Bo, whether he was licensed or not, or whether he was legally allowed to trade in these certain transactions.
If he had checked, he would have found that Diamond was not registered to sell these investments. This violated state and federal securities laws. Diamond told victims the investments did not have to be registered and to keep it all confidential. Classic red flags.
The customer is asked to sign a confidentiality agreement in which it states you are not to talk to or disclose this opportunity to anyone else. And the Ponzi schemer uses those mechanisms to avoid law enforcement from finding out about these type of schemes. So a typical red flag is if there is some sort of confidentiality provision in it. There was also another thing that we saw in Ponzi scheme type contracts in which they represent that there's no requirement for them to be registered with the SEC or FINRA or any other agency.
But who has time for that when your friends are getting 60% returns?
I drank the Kool-Aid just like everybody else. There are a lot of people around here who lost a lot more money than I did, and who are a lot smarter and a lot more experienced investors.
What's the key takeaway here? The difference between smart and smarter investors? Just a few simple questions.
This is a big way. It doesn't guarantee that the investment you do is going to not be a fraud, but it dramatically reduces the risk of it being a fraud.
There are 3 key strategies to protect yourself. First of all, end the conversation. Have a refusal script in place. 2, turn the tables and ask questions. That's important, to ask a lot of questions of a fraudster. And finally, talk to someone first. Get that second opinion.
Look at what the pitch is. Is it something you understand? If you don't understand the details, or if the answer is, well, this really is a very complicated issue, you have no business investing in something that you don't understand or can't be explained to you.
So the good news is that by virtue of bringing ask and check into your vocabulary, you are now armed with the information and tools you need to invest wisely.
We have found that people who come to these types of seminars like yourselves are not actually the people most likely to be taken by the scam artists. You're continually learning, you're going to workshops like this, but if you're not the most likely victims of fraud, each and every one of you knows somebody, a neighbor or a friend, who may be. And we are hoping now that you're fraud fighters to enlist your help to get this information to them.
You're all already smart investors, but now you're also a trained fraud fighter.
So tell all your friends to ask and check. And thanks very much for joining us today.
Thank you so much.